Greetings and welcome to our webinar entitled Planning for Long-Term Care and How to Protect Your Retirement and Lifestyle. My name is Michael Holt. I am your host today. I am founder and senior partner at Lifestyle Income Strategies in Orange, California. A little bit about us. We are long-term care planning experts, and we assist families with preparing for potential long-term care events by providing resources to pay for long-term care expenses while protecting and preserving assets and income streams. We have over 22 years of experience, more than 500 clients, and we operate in 48 states. So here is our agenda for today. We're going to talk about what is long-term care, how much does it cost, some options to pay for that care, a little bit about insurance, and we'll wrap up with some free gifts and the next steps. So what is long-term care, or sometimes called extended care? It is actually an event, and it's broadly defined as care provided for the benefit of those who are unable to care for themselves. Typically, it's provided for an extended period, usually meaning over 90 days. If it's less than 90 days, that probably falls into the short-term care arena. So it also assists people with activities of daily living, or ADLs, and we'll talk about that as well. It provides supervision due to a severe cognitive impairment, such as Alzheimer's or dementia. One note I'd like to make is a long-term care event actually affects an entire family and not just an individual. I'd like to share this with you with former First Lady Rosalynn Carter. This is what she had to say about the four kinds of people in the world. There are those who have been caregivers, those who are currently caregivers, those who will be caregivers, and those who will need caregivers. And I have found that to be very true in my career, and maybe you have also experienced that personally as well. So where is long-term care provided? Well, most of it's provided at home. As you can see, about 73% of people typically have it provided in their home by informal, unpaid caregivers, such as family or friends. There's also assisted living, where about 13% of the people today are receiving care, or nursing home or skilled nursing care facility, where about 14% of people are receiving care. So what triggers a long-term care event? Well, two things. The impairment of ADLs you can see on the left-hand side. Those 6 things: transferring, toileting, bathing, dressing, eating, and continence. When you can't perform some of those ADLs, it probably will trigger a long-term care event. Or if you have a cognitive impairment, such as we spoke about before, like Alzheimer's or dementia, or maybe even some type of brain injury as well. So how long might I need care? That's often a question my clients ask me as well. Here's a chart from the American Association for Long-Term Care Insurance, and it varies from 1.6 years to maybe almost 4 years. However, it could go much longer if we're talking about someone with Alzheimer's dementia. It's not uncommon for those cases to last 5 to 10 years. So here's an important question for you. And this is what I ask all my clients. Although no one wants to believe they will need long-term care, when you think about it honestly, do you believe there's a chance something could happen to you? Well, here's what the statistics tell us, that 70% of people over 65, or 7 out of 10 of us, will eventually need long-term care. So the real question is, are you one of the 7 or one of the 3? We really don't know. But here's something that might surprise you, that 40% of the people receiving care in the United States, which is about 13 million people, actually range from ages 18 to 64. Going back to my comment, it's an event that can happen really to anyone at any time. The key is to be prepared. So what do people also ask me about long-term care? Well, if it's in my future, how much will it cost? So let's take a look at that. Going back to the prior slide, the 3 places where people usually receive care: at home, even a home health aide could be $70,000 a year or more. Assisted living can range from $60,000, $70,000, $80,000 as well per year. And certainly a semi-private room could be $100,000. A private room might even be $150,000, depending on where you live. But regardless, I think you would agree, wherever you are, the cost of care is very expensive. So here's an important question for you as well. If you were to get sick tomorrow, other than liquidating your assets, relying on your children, or seeking government assistance, do you have any plan to pay for your care? Unfortunately, most people don't. Or do they? And the reason I say that is if you don't have an official plan, Uncle Sam has one for you, but you may not like his plan. So, what are the options you have to pay for long term care? I'm going to share four with you today. It's not the exhaustive list, but it's the most common. Number one is family. You can certainly rely on your family to take care of you not only for your physical needs, but maybe also your financial needs as well. You could self fund or reuse a reverse mortgage. I lump them together because it's still using your own money, whether it's coming out of savings or home equity. There's also government assistance, Medicaid, VA for those who qualify, and Medicare. But again, Medicare is very limited, and I'll show you in a slide why it's not really long term care coverage. Or you could take out long term care insurance. This way, you can transfer all of the risk to an insurance company. You can even use old annuities to fund a policy as well. So let's take a little deeper dive. Self funding. Well, this can work if you have ample funds for an indefinite care. The problem is you don't know how much money you will need and how long you will need that care. But it will allow you to decide the type and place of care. You can even choose your caregivers. But you may have to liquidate assets that you did not plan to liquidate for long term care, and it could reduce inheritance that you might be planning to share with your beneficiaries. You are also missing the opportunity to leverage your savings. When I use the word leverage, I'm typically referring to what an insurance company could do, which is take those funds and multiply them to a much greater benefit level. Keep this in mind. If you run out of money, you may have to rely on family or the government to pay for your long term care. So, reverse mortgages, they can work, and you usually can start them at age 60 or 62, depending on the lender. It will allow you to take out a lump sum or even just receive structured payments. It's true, you can stay in your home for your life. There's no mortgage payments due while you're alive, and you can use those funds really for any purpose. However, we suggest using it to purchase a long term care policy because the benefit level would be much greater than just the cash you receive. So let's talk about Medicare. Medicare will pay for some long term care costs, but only after a 3-day hospitalization, and then you are immediately transferred to a skilled nursing care facility. It won't pay if you end up in assisted living or home. It must be to a skilled nursing care facility. And then it only pays the full cost of that care for 20 days. It will pay part of that cost from day 21 to 100. But Medicare does not pay for care after 100 days. It pays nothing. It doesn't pay for personal or custodial care, which is the most common type of care at home. And certainly it reduces home health care benefits as well. It's very limited. So, again, Medicare is a federal health insurance program that provides limited coverage for long term care services. It's not a long term care coverage policy. But who does pay for long term care? Well, Medicaid or Medi Cal in California can. It's a joint federal state program which will pay for long term care expenses. In fact, Medicaid is the largest public payer of long term care. As you can see in the chart below, 43% of people right now are being actually supplemented by Medicaid to pay for their long term care expenses. The problem is, in order to qualify, you practically have to be broke with very few personal assets or income remaining to your name. So it may not obviously be the best option. But let me leave you with this. If you intend to use Medicaid or Medi-Cal to pay for long-term care expenses, make sure you plan your approach well in advance of care with qualified experts. Don't try to do it on your own because you'll waste a lot of time and money to try to get it right. So let's talk about long-term care insurance. It's designed to pay costs associated with long-term care. It's a great option for those who cannot self-fund and even for those who can. And the reason I say that, it goes back to leverage. So you can take what money you have, leverage it with a long-term care policy, and multiply those benefits greatly. You can still decide your place of care and even the providers you want. It certainly helps protect your estate and income as well. So, what is a long term care policy? This is what I tell my clients. Basically, it's nursing home avoidance insurance. It allows you to stay in your home for your care. It will prevent your spouse or partner from exhausting themselves to care for you when you can pay for someone else to help. It can also prevent another family member from putting their life on hold to care for you. And I've seen that many times in my career. It can prevent financial issues and hardships due to the cost of your care. And it is one of the greatest acts of love you can give to your family and friends as well. So let me ask you this question. What if you could have a long term care insurance policy with guaranteed premiums and benefits and get your money back if you no longer wanted the policy, or have the money passed to your heirs tax free if you did not use it? If that's of interest to you, I want to share this with you as well. It's called an asset based long term care policy. This is not traditional long term care where you pay as you go, and if you don't use it, you lose it. What this does, it actually combines life insurance with an annuity or long term care insurance itself, and we call it a hybrid approach. The reason people like it is because you can use a one time premium payment and no future premiums are due, one and done, or you can certainly fund it over a set period of time if needed. Premiums are guaranteed not to increase, benefits are guaranteed not to decrease. Usually there's a guaranteed cash value on the interest rate of like 3 to 5% on the cash that you have in the policy. You can use non-qualified or qualified money or even owed annuities. So if you got a 401k or 403b sitting around, you can even use that to fund your policy. And as we mentioned, premiums and earnings can be returned to you or your heirs if the benefits are not used. So let's look at an example. This is a case we had a couple years ago with Joe and Mary Ann, age 60 and 55. They wanted joint policy to cover both lives, and we can do that. They do not want ongoing policy premiums. They had 150,000 in a CD to use for future long-term care. That's what they had set aside. They wanted lifetime benefits, regardless of how much or what type of care is needed. They wanted to last the rest of their lives if needed. So here's the solution we came up with. We used the asset-based or hybrid policy. We deposited the 150 into a long-term care policy, one-time premium for them and done. They received a guaranteed 4% annual growth of the cash value. We added 2% inflation because they're really still quite young. They may not need this coverage for maybe 20 more years. We did cover two lives on one policy, and this is the result. We were able to get them a policy starting at $6,000 per month per person, scaling it up to $12,000 per month per person in their 90s. It had an immediate tax death benefit of $197,000, which is more than they put in. And they had a return of premium option, which means they could get their money back, or any remaining cash can be paid to the beneficiaries where they did not use all of the benefit, which is a great solution for $150,000 in cash. We were able to give them unlimited benefits for life, and that's where the leverage comes in with an insurance company. So what's not to like? It's one-time premiums or pay over a set period of time. Builds cash value. You can add inflation. Premiums never increase. Benefits never decrease. The death benefit is payable to beneficiary, again, tax-free. And even tax advantage benefits. That means the payments you're getting out of the policy to cover your long-term care costs are tax-free. Protects your assets and always it can leverage your money 2, 3, 4 times or more of the premiums that you put in. So one other important question I like to ask people is this. Can you think of anything other than the risk of long-term care that could involuntarily wipe out your life savings and take away your independence? I think you'd be hard-pressed to find an answer other than no. So as we wrap up, here's a checklist I'd like to leave you with, and I always invite all my clients to follow the same procedure. Make sure you explore all possibilities for long-term care coverage. Get to know the local resources in your area, and we can help you do that. Be sure and compare options and costs with the help of a qualified financial professional such as us. Talk with your family and friends about your plans because it's not just affecting you, it affects the entire family. Here's 4 documents that I always recommend people have, regardless of their financial situation. Have a current will and testament, a healthcare directive on file, a power of attorney, and any long-term care plans and policies. This would greatly benefit not only you, but the family that has to take care of you as well. If you need help with those documents, we can do that for you. As we wrap up, here's some free gifts I'd like to offer you. One is a long-term care planning guide, and 2 is a free long-term care planning session or phone call with me. In order to obtain the guide, you can click on the link below this presentation if you see it. If not, simply email me at the email address on your screen, and I'd be happy to provide that to you. It's an easy read. It goes to more depth than what we were able to cover on the webinar today. The second gift is your meeting with me. You can click on my Calendly link below the presentation. Just select a day and time that works for you for a call and complete the form. It's rather simple. We will confirm the receipt of that meeting request and email you a confirmation. So simply click on the calendar link below to schedule a meeting with me, and I'd be happy to discuss any aspect of long-term care planning with you. I'd like to thank you for attending today. You see my contact information is on the screen, so feel free to use that anytime, and enjoy the remainder of your day or evening. Thank you.